So if you want to know how you can get a 31% uplift on your pension contribution, especially if you're a high rate taxpayer in the UK, and you want a quick guide on how to claim your high rate tax relief, then welcome to this video. So whether you're close to retirement or you just want to maximise the tax relief that you're entitled to, then keep watching the video to the end, and then we're going to go through a worked example to show you how it works in reality. So all the resources that I refer to are going to be linked in the description below. So welcome back to the channel, and if this is your first time, a very warm welcome to the Economies channel, where together we're going to be learning the language of money and wealth. We're also dedicated to money mastery and making financial wisdom available to all. Hi, my name is Simon and I'm a chartered financial planner here in the UK. So understanding tax relief can significantly impact your financial planning, making your retirement years more comfortable and more secure. Now I'm going to walk you through the basics of extending your basic rate band, the self-assessment claim process, personal allowances and thresholds, how many people have been affected by this, and of course a refresher on the advantages of personal pensions, which sometimes get overlooked. And we'll also discuss whether backdated claims are even possible to claim back from the HMRC. So before we dive in, I'm going to pop up our usual quick disclaimer to say that this video is for education and entertainment purposes only and shouldn't be misconstrued or misunderstood as giving financial advice. So let's start with the basics. What does it actually mean to be a high rate taxpayer? So this chart is taken from the government website and it refers to income tax rates. Now, the personal allowance is £12,570, and that's the amount that we can all earn with no deduction at all of income tax. Now, a basic rate taxpayer is someone who earns between £12,570 and £50,270, and that is the amount you pay 20% income tax on. Now, the difference between those bands is 37,700, and that is called your basic rate band. Now, I need you to remember that or write it down because I will be referring back to it later in the video. Now, the high rate taxpayer is someone who earns between 50,270 and 125,140, and you will pay 40% on that tax band. Now, £125,140 is an odd figure, I'll admit, and that's because your personal allowance of £12,570 is reduced by £1 for every £2 you earn over £100,000. So when you earn £125,140, that actually means you've got no personal allowance left at all. So what that means is for those of you who do earn above this amount, you're going to have an effective tax rate of 60%. Now that is what you call a tax trap. So how many high rate taxpayers are there in the UK who may well benefit from this video? Well, in the last 4 years, the percentage of high rate taxpayers has increased from just over 12% to just over 15%, or an increase of about 28%. Now, income tax thresholds have been frozen and will remain frozen until April 2028. That means there's going to be more people paying more tax more often. Now, in this chart from the Office of Budget Responsibility, it shows that in 2023, there were 5.6 million people paying higher rate tax, and that is projected to grow to 6.7 million by 2028. So what that means is a further 1 million people are going to be paying 40% income tax over the next 5 years. So even more telling than that is that this year there were 1.3 million people paying 40% tax for the very first time, and that's expected to increase to 2 million next year. So what that means is there's a further 3.3 million people paying high rate tax in the UK. And I certainly hope that they all watch this video. If you want me to record a video about how you can use your pension contributions to lower your adjusted income to regain some or all of your personal allowances, or even to reclaim some of your child benefit entitlement, which you might have lost as a result of the high income child benefit tax charge, if so, then please let me know in the comments below and I'll be very happy to put a video together for you. So how is tax relief applied? Well, if you're employed and you make pension contributions either by the net pay arrangement or even via salary sacrifice, You don't need to do anything else. So all that means is whether you're a basic rate taxpayer or a high rate taxpayer, there's absolutely nothing extra for you to do. What you will have to do is make sure you speak to your admin department, your HR or pension department, or even speak to your pension provider and just check how they process your pension contributions, and you might well be in luck. But for the rest of us, it's going to work a little bit like this. Now, basic rate tax relief of 20% is applied to the pension contribution that you want to make. I have covered in previous videos how to calculate your tax relief, so have a look for them in the economies video library. But here's a gentle reminder. You'll divide your contribution by 0.8. So if you're contributing £8,000, you'll divide that by 0.8, and that comes to £10,000. You take one from the other, and then your tax relief then is £2,000. And that is generally pre-funded automatically, instantaneously by your pension provider. But you are going to have to speak to them to find out if that's actually how they do it. But for higher rate taxpayers, they're going to be entitled to an additional 20% tax relief on that 10,000 contribution, or an additional £2,000 that is due to them. So this won't happen automatically, and this has got to be claimed back from the HMRC via self-assessment. Now, if you're not confident with making this claim online or even submitting a paper return to the HMRC, please look to an accountant or a bookkeeper to do this for you. Now, it's actually worth mentioning that this extra £2,000 due to the high rate taxpayer is not paid directly into the pension. It's either used to reduce any tax liability that you have already with the HMRC, or the HMRC can actually amend your PAYE tax code accordingly, or even you could have the £2,000 paid directly to you instead. Now, it might be tempting to think that you're going to be entitled to 40% tax relief on your whole pension contribution, but that is not the case. You're going to be entitled to 40% tax relief on the amount of the contribution as long as you've paid a similar amount in income tax. Now, I'm going to explain that on this bar chart on screen. So if you've got a salary of £65,000 a year, for example, and we know that the higher rate tax band starts at £50,270, what that means is you're going to be paying income tax at 40% on the difference, which is £14,730. So if you wanted to make a pension contribution of £20,000, you're going to get basic rate tax relief of 20% on the whole amount, and the additional 20% tax relief for a higher rate taxpayer is only going to be allowed on £14,730. Now, the cost to the government to provide this valuable tax relief is increasing year on year. The net cost in 2021 was £48.2 billion. So naturally, any government is going to be looking to close this pension tax relief loophole at some point in the future. Now, there are proposals to implement a single tier level of tax relief for pensions, which could be either 20%, 25%, or 30%, depending on the consultation. But what is clear is that they are likely to abolish the 40% rate. So what that means is when the current system of tax relief changes, the ability to take advantage of high rate tax relief is going to be gone. And once it's gone, it's going to be gone for good. So if you're finding value with this video and it's helping you to understand pension tax relief, then please hit the like button and subscribe to the channel. Now, I did mention earlier about the basic rate band, which is currently £37,700. And that's the difference between your personal allowance of £12,570 and the high rate level, which starts at £50,270. So one of the first steps in maximising your tax relief is understanding how to extend or how to stretch out your basic rate band. Now, the basic rate band in the UK can be extended by making personal contributions into your pension. And this is particularly advantageous for higher rate taxpayers who are close to retirement, because by reducing your taxable income, you can also reduce the amount of tax that you're expected to pay. So I'm going to show you how that works in a bar chart on screen. So we're going to be following on from the earlier example with a £10,000 pension contribution. So the basic rate band, which was £37,700, is now extended by the value of the pension contribution of £10,000 and now sits at £47,700. What that also means is you're going to start paying 40% higher rate tax at £60,270 instead of £50,270. So how can we go about reclaiming the extra 20% tax relief that's due to us via self-assessment? Well, for higher rate taxpayers, self-assessment becomes an essential tool in managing your tax affairs. The self-assessment tax return, or as we affectionately call it, the SA100 form, allows you to declare all your taxable income over the year and claim back any tax relief that you're entitled to. Now, this is going to include tax relief on pension contributions, but also charitable donations and much more besides. So for those of you that are close to retirement, understanding how your personal allowance interacts with your pension contributions and also your taxable income, well, that can be a game changer for tax efficiency in the future. So let me introduce you all to the famous SA100 form. Now, completing the SA100 form correctly is crucial for claiming your tax relief back correctly first time. This form is going to allow you to detail your pension contributions, which can lead to the extension of your basic rate band, which we talked about earlier. Now, make sure you fill out all the sections relevant to your income and your deductions as accurately as possible. Now, if you're unsure, consider seeking advice from a tax professional and make sure you're claiming all the tax relief that you're entitled to. So I'm just going to show you what that looks like on screen. So the section we're looking for is tax reliefs in section 1. You need to add the amount of the pension contribution. And that is going to be the gross amount, which is your contribution plus the basic rate tax relief at 20% added. Now I'm going to highlight the relevant explanation on screen from the how-to guide from the HMRC. And here it basically says, in their words, personal contributions that had tax relief in the scheme that refers to the addition of basic rate tax relief only. And I've highlighted that on the form. So what happens if you're eligible for higher rate tax relief, but you've not claimed it before? Maybe it's because you've got to claim it for the first time. Well, the important thing is not to worry, as the HMRC is going to allow you to claim higher rate tax relief for up to the 4 previous tax years, and that might mean you're going to be entitled to a substantial refund. And I just want to go over some of the benefits of a pension, as they sometimes suffer from a fairly bad reputation. Now, I've already talked about the ability to claim tax relief at your highest rate. Now, a pension has got tax advantage rules wrapped around it, meaning that your investment for your future can grow quicker. And by starting earlier, this is going to have a bigger compound effect on the overall investment returns. Now, there are generally a huge range of funds to pick from that are going to meet most people's risk appetites. You can contribute up to £60,000 gross per tax year, and famously, you can take and withdraw 25% as a tax-free lump sum. It's also worth reminding that a pension is also considered outside of the estate for inheritance tax purposes. And you can also nominate your pension benefits to any beneficiaries so your pension doesn't die with you. I promised you at the beginning of the video would show you a worked example about how you can get a 31% uplift on your contribution. Now, this is most effective when you're a higher rate taxpayer before you retire, but you're going to be a basic rate taxpayer in retirement. And that is where the overwhelming majority of my clients actually sit. So what that means is you're going to get 40% tax relief on the way in and only pay 20% income tax on the way out. So let's assume your pension contribution is £8,000 and we'll divide that by 0.8, and that gives us a gross pension contribution of £10,000. As a high rate taxpayer, you're also going to be able to claim a further 20% or £2,000 directly from the HMRC. And at retirement, you're going to be entitled to 25% tax-free cash or £2,500. Once you've taken that, that's going to leave you £7,500, and that's going to be taxable at 20%. So once you've paid that and you've paid your tax, your net figure is going to be £6,000. So in summary, you'll have had £6,000 net after tax, £2,500 tax-free, and £2,000 additional tax relief direct from the HMRC. That comes to £10,500, but you only made an original investment into your pension of £8,000. So if you divide 10,500 by 8,000, the difference is 31.25%. And that is an amazing uplift on your pension contributions, regardless of how you look at it. And that's even before you've considered any investment growth or capital gains. So just to conclude, maximising your tax relief as you approach retirement is a very powerful strategy for ensuring a more secure financial future. By understanding how to extend your basic rate band, by correctly completing your SA 100 form, and by taking full advantage of the whole range of benefits offered to you by your personal pension scheme, you can significantly reduce the tax liability, but also increase your retirement savings for the future. Now remember, it's also possible to make backdated claims if you haven't been maximising your tax relief in previous years. So planning and knowledge are key. So consider consulting with a tax professional to explore your specific situation and all the opportunities that are open to you for tax relief planning. So thank you for watching the video to the end, and I hope this guide has showed you the path to maximising your benefits and has made the journey to retirement a little less daunting. So if you like what you see and you like what you hear, please hit the like button and subscribe, and also look to hit the notification bell so we can make financial wisdom available to as many people as possible. And finally, this is your channel and this is your voice. So if you've had a good experience or even a bad experience about retirement planning, then please share your story in the comments below and we can all learn together. Thank you so much. It's been a great pleasure, and I'll see you all next week.